Hello there my friends and welcome back to another episode of TA with MK. My name of course is MK. Now today's episode is probably going to be the most important video that I put out during this entire bull run. And why do I say that? Well, it's rather simple. I'm here to make money. I'm assuming that's why most of you clicked on this video. You're in crypto because you want to be able to make some life-changing wealth. That would be me as well. And I do believe right now is the time we need to position ourselves to be able to make that possible. I'll be discussing three things in today's video that will all tie together to formulate my exact plan or strategy to maximize gains for this bull run. Now, if that sounds interesting to you, please consider liking and subscribing to the channel, as obviously it helps it to grow. Also, in the description of every one of these videos, there is a link to my free Telegram group. You can also join that. And with all that out of the way, let's dive into today's content. Let's go. Now, just real quick before we actually dive into the three things that I plan to talk about in today's video, I wanted to give an update real fast on the Fear and Greed Index. This is on alternative.me, the Crypto Fear and Greed Index. Now, I discussed this in the last video that I made, which was the Time to Panic video. In that video, I did the opposite of that. I actually gave three reasons why it wasn't time to panic and that I felt some of the best buying opportunities were actually coming. And a lot of that was based on, or at least one of my three things in that video that I was basing that on, was the Fear and Greed Index. Now, historically speaking, if this comes down in fear or extreme fear, especially during a bull run, that can represent the best buying opportunities. And as you can see right now, we're sitting at extreme fear at a level 17. So obviously it will sound a little cliche to say, but it's important to remember that we always want to buy fear and sell greed. So the number one thing I want to quickly discuss in today's video would be kind of a two-part question. The first half being, where are we in this bull run exactly right now? And then the second part of that question being, where is the retail at, or when can we expect retail to actually enter the market? Now, for those of you that are new to crypto or maybe to trading or investing in general, let me just quickly explain the importance of retail. Now, the slang or not so nice term for them would actually be the dumb money. Now, I'm not saying I'm not dumb money, but I've been in the space long enough now that I would like to think I've at least upgraded to something along the lines of irresponsible money or something like that at this point. But what I'm getting at is, in order to make money in investing or trading, you need to be able to take money from someone else, right? That's all it really is at the end of the day, is a transfer of wealth from, one person or persons over to other people. Now, we all know there's what's referred to as the whales or the smart money, right? And they're a little bit harder to trick because at the end of the day, they just have more money. They can wait around for the right times. In some ways, it seems like they kind of are in the know, which, maybe we can't be proven, but I think a lot of us just know that they kind of have some insider, knowledge that we're not privy to. So I guess what I'm getting at is your target to maximize gains for this bull run really should be the retail, or as I put it earlier, the dumb money, because these are going to be the people that enter too late, buy at or near the top, obviously hold on, clear to the bottom, probably through the bear market if they don't panic sell and decide to abandon the space at some point during that. And if they decide to hold on long enough, then by next bull run, that group of people that we hopefully were able to take money from this bull run become next bull runs not quite as dumb money. It really is just the circle of life in some ways, or I guess we could call it the circle of investing in this case. So a big part of why I'm so bullish, why I'm buying now, why I was buying 2 weeks ago, even before this biggest dip, why I haven't been faltered at all, is because in my opinion, retail hasn't even entered the space yet. Again, like I said earlier, it doesn't mean some retail hasn't, but the mass majority of retail, in my opinion, have not entered the space yet. And this right here is one of the big reasons why I don't think they have. As you look here at the crypto money flow cycle, which basically every bull run has followed, you have people moving their money from a course like USDT or USDC into Bitcoin, Bitcoin obviously being the first front runner of the bull run. Eventually the money flows into large caps, mid caps, small caps, and eventually back to Bitcoin, and then the cycle just repeats itself, right? Well, the biggest thing that I've noticed so far this cycle is we haven't had this happen yet. Well, in my opinion, for this to happen, you need to have retail start to enter the space. Here's another chart that shows basically the same thing, just with a little bit of an explanation for each phase. But again, phase one, Bitcoin, Ethereum, large caps, alt season. Now, the reason why we haven't seen this yet, at least not to any serious magnitude, again, is because the retail hasn't entered the space yet. Why do I know that? Well, because what has dominated the bull run so far has been things like meme coins, right? Well, a lot of these meme coins that that are dominating are coins that you have to buy on very obscure exchanges, or you have to have a MetaMask set up. You gotta go to a Solana chain. You gotta buy them in weird places that retail simply don't know or aren't educated, haven't been in the space long enough to even know how to buy or even where to begin to buy these at. This is going to be the whales taking advantage of those that have been in crypto long enough to understand where to get these coins, but not necessarily understanding how or when to sell them in time to actually make profits. Now, I wouldn't try to sit here and tell you exactly where we're at in this phase, but where I believe we're personally at in this phase is very similar to where this first top happened in the last bull run. And what I mean by that is Bitcoin, of course, rallied up to new all-time highs, but a lot of what was driving that price up at the time was not retail, in my opinion. Of course, towards the top, definitely retail entered, but you had Coinbase that was getting ready to go public, and there was just a lot of whales, people that were to do with that, to do with that exchange specifically, that just wanted to see Bitcoin be performing well, and especially an all-time high, even better, at the time that that went public. Well, the day that that went public is basically the day that this topped and then, of course, pulled back. Well, at that particular point in time, as I pointed out in my last video, the amount of money that it actually went into altcoins versus Bitcoin was actually minimal compared to after it found its bottom here in July of 2021. This second rally up, which of course Bitcoin itself only put in a top that was only slightly higher, something like $3,000 or $4,000 more dollars, but the amount of money that was injected into the altcoins during that second rally, or the second half of that bull run, was significant. Now fast forward to this bull run, I don't think it's really all that much different. We had the Bitcoin ETFs that drove price up to, of course, new all-time highs, which happened prior to the halving, which was different than any other cycle prior to this. But at the end of the day, it wasn't like retail had a clue what ETFs were, right? This would have been institutions, big money, big investors. The word ETF or Bitcoin ETF doesn't mean anything to a retail person. They might have looked on their Robinhood app or their Webull app and happened to see, oh, Bitcoin's going up. Let's check it out. And maybe right towards the top or near the top, there was some retail that entered the space, and of course are now deep in the red. And let's hope they stuck around or will stick around for the next half of this bull run. But at the end of the day, I don't think we saw a huge amount of retail enter the space, which is why this is the number one reason that I'm so bullish. Again, retail hasn't even entered the space yet. So then that ties directly into the second part of my strategy, which is basically going to be, how am I going to diversify my portfolio from today versus, once we see retail enter the space? How am I going to maximize my gains this bull run based on the fact that retail hasn't entered yet, but I anticipate that it will at some point? So the way I decided to present this to you, that I figured would just be the simplest way to get this information across, was just using some very simple pie charts. Now understand, as I go through these percentages of how I'm allocating my money at different times during the bull run, that you may want to adjust these numbers a little bit up or down depending on what your exact risk tolerance is, or whether you're more of a Bitcoin person, that's where you want to make most of your money this bull run, or whether you'd rather make most of your money in the micro caps or small caps, for example. So for this first pie chart, I've labeled it phase 1, which is Bitcoin, and what I mean by that is that between where we're at now and when Bitcoin breaks its previous all-time high and puts in a new all-time high, above 74K, something like 75 to 80K, between now and then, I think most of the money flow as far as wells are concerned, and that's all we really have in the space right now, is just us regular crypto people that have been around and the wells. We don't have retail yet. That's where most of the attention and the money flow is going to go. So I want to have 65% of what I have in crypto just in Bitcoin. I'll have 25% in Ethereum, just kind of preparing myself or setting myself up for when that money does transition over into Ethereum. And then at this point in time, I'm only going to have about 10% in large caps, but I do think this is the time you want to start positioning yourself in those large caps. You're seeing those coins like Chainlink, Cardano, Polkadot, Litecoin, the list goes on and on. Algorand, all these coins have not been performing well for this bull run. They're all at like basement prices again. This would be a good time to start allocating at least some of your portfolio towards these coins so that later you can reap the benefits. Now, as soon as Bitcoin breaks its all-time high and hits something between 75 and 80K, I'm going to start taking action right then to move over to what I call phase 2, which is the Ethereum and large caps. At this point, I'm only going to have 25% in Bitcoin, which means I'm going to sell a lot of my Bitcoin, take profits at that point in Bitcoin, and move over to Ethereum, now 35% of my allocated money, and I'm going to have 40% now set aside strictly for those large cap coins we talked about. Now, will we have missed out on some of the potential gains at that point on large caps? Yes, but I think at that point it's worth the risk to go ahead and just sit tight on those and keep your money where it's safer in Bitcoin and Ethereum, because a lot of the gains that are going to happen in the large cap coins are going to happen after Bitcoin breaks its all-time high, or at least in my opinion. So at this point, then I start allocating my money into those coins altcoins. You know, pick 2 or 3, maybe 4, even 5 possibly of your favorite. I'm not here to tell you what your favorites are. That's your choice to make. You know, I would personally put a video out at that time of which coins I'm choosing, but things like Cardano, because they have such a cult following, things like Chainlink is a safer bet. Polkadot, I think, still has a chance to perform well later in this bull run, and the list goes on. Now, from there, I will quietly transition over to my own personal phase 3, which I have labeled the large and mid cap phase. Now, how are we going to know when it's time to transition from phase 2 to phase 3? Well, I don't think there's a perfect answer to that, but the way that I plan to start making that transition is going to be based on when the majority of the large cap coins, these are coins inside the top 50 or so, start to eclipse their high from this cycle. I'm not talking about their all-time high. I've been on record stating before on previous videos that I think a lot of the coins, if not the majority of the dinosaur slash large cap coins, will even put a new high this cycle. But as soon as they're breaking their high from this particular cycle, then I think it's time to start transitioning our money a little bit out of them, because at that point, from the time that we will have entered to that point, most of the money we had in those will have at least 2x, which for large cap coins is pretty good. Some of them may be 3x from the time from where they were at to where we entered. And I'm not saying we take all of our money out of them, because as you'll see here, we'll transition to where we'll still leave 25% in those large caps, but we're going to take some of those gains we've already got, spread it a little evenly across the board for phase 3, 25% Bitcoin, 25% Ethereum, so we still have 50% of our money just in those 2 coins, 25% large caps and 25% mid caps. Mid caps being anything outside the top 50 or top 75 on down to like 150 to 200-ish range. I would consider most of those coins to be mid cap coins. And then last but not least, we'd of course have my phase 4, which is the small and micro cap mania. Now, you'll see here on this chart that I've listed 50% of my money going back into Tether or fiat. This is just my own personal strategy to lock in as much gains as I can to that point. That way I, no matter what, come out ahead at the end of this bull run. To me, at the end of the day, that's the most important thing, right? But depending on your risk tolerance, you could actually do this more like 25% or 30% here, and maybe you move this yellow, pie piece here that says small slash micro caps all the way up to something like 50%. Now, granted, that's because that's not how I'm doing it. I'm not here to tell you exactly how you should do it, but the point is at this point that we've moved more out of our Bitcoin to where we're only sitting at about 15%. We've still got 5% in large caps, 5% in mid caps, and 5% in Ethereum. We've transitioned quite a bit out of Ethereum at this point, and now with the majority of the money that we still have left in crypto, whether that's 20, 30, or 40%, again, depending on your risk tolerance, now we're going to go ahead and invest some of that money back into the small and micro cap coins. And when do I personally plan to make that transition to phase 4 where I'm in small and micro caps? Well, just like all the other phases, I might do it a little too early, but as soon as I start hearing a lot about meme coins again, or these obscure coins that are making all of the headlines, but they're not coins that are very easy to get to and purchase for a lot of your average retail buyers, well, that coupled with as soon as total 3 here, which is the chart that I'm looking at right now. Now, for those of you that are new to this chart, all it is it's all of the money in crypto minus Bitcoin and Ethereum. So this is just all of the altcoins. As soon as this coupled with, the headlines at the time is breaking its all-time high from the last bull run, which is like 1.13 trillion, so a little over $1 trillion. As soon as that's breaking that, it's probably going to go pretty parabolic, pretty fast, of course, but at that point, I believe we're only a few weeks, maybe a month, month and a half tops away from the top of the bull run. So at that point, I'll want to transition that money that I have set aside, some of my gains, into those microcap coins. Again, at that point in time, I'll put out a video of which coins I'm looking at. The coins I'm looking at now will probably change between now and then, so we'll just wait until that phase or close to that phase for me to put out a video about that. And finally, my friends, the part number 3 to this entire strategy is basically as simple as this: be prepared for an audible. Now, I don't know if a lot of my viewers are sport fans, but I'm a big fan of American football. I'm from the United States, so of course we have American football. It's very popular here. And in the sport of football, and similar to most sports, you draw up plays, of course, and on paper they seem like a good idea, but sometimes when you line up to run the play, you realize, or football players realize, that the play is just not going to work. And so then they do what's called an audible. It means they switch out of the play they currently drew up and they draw up an entire new play. Well, in this case, case, we have a plan. It's very well written out for you here, but it's not set in stone because every cycle is a little bit different. There's always going to be curveballs thrown at us, and so we need to be prepared for that and have an audible ready to go. Well, the audible that I've drawn up for this bull run, we're going to refer to as the HODL 25. So here with another quick pie chart is a quick explanation of what audible 25 is, which is more or less a plan B, right? And what it is it's going to run side by side or at the same time as I'm executing plan A, which was all of it we talked about to this point in the last segment. Well, plan B is just going to be me taking 25% of the overall money I plan to invest in crypto this cycle, having it set aside and using it to purchase these coins that I'm going to hodl. All right, so allow me to elaborate just a little bit further. Let's say you had $1,000 you wanted to invest into crypto. You would take 25% of that, which would be 250 bucks, and you would set that aside. The other $750, you could follow all of the plan that we talked about in part number 2 to my plan, which is of course phase 1, 2, 3, and 4, as far as moving your money at the right times from Bitcoin, Ethereum, to large caps, to mid caps, to small caps, right? Just like we talked about. Now, this part would be the other $250 that you had set aside would be my audible or plan B. With that $250 or the remaining 25% of whatever number you started with that you plan to invest in crypto, you would then take that and distribute it this way between large caps, mid caps, and micro caps. Now you could split this evenly, like 33.3%. I just decided to do 40, 30, 30. It still adds up to 100%. This is a little bit safer because you're putting a little bit more money in large caps, which are a safer bet always to anything lower than that. But there's lower risk, no, not as high of reward. Obviously, if you were to distribute this a little bit more towards the micro caps, that's higher risk, higher reward. At any rate, what you're going to do is you're going to pick 2 coins from each segment. You're going to do your own research. You're going to figure out 2 coins you believe in from each of these segments, large, mid, and small caps. And allow me to elaborate one more time, kind of for the sake of this segment, what I would define each of those as. For this, I would say anything inside the top 50 would be considered a large cap. Anything from like rank number 50 on to like 100 or just outside of that would be a mid cap, and then anything beyond that would be small. Now, once you start getting past like rank 250, that kind of defines in my ideas, or in my eyes at least, as micro caps. Now, once you've settled on your 6 coins, you can go ahead and make that purchase. Now, again, don't chase any green candles, obviously. Wait for a day when the market's red, or at least the majority of the market's red. I think you'll have plenty of opportunities over the next few weeks to do that. So, you know, once the market gives you a good day for that, you can go ahead and start making the purchases of these coins until you have all 6, 2 from each of these sections. Now, then at that point, you're just going to hodl them, easy as that. You might ask, okay, well, how am I supposed to know when to sell those coins? Well, it's going to follow the same playlist or playbook, basically, as the first plan that I had, which was, you know, plan number 2 in this video. However, you're going to need to keep track as each segment has its rally to know that even if they went out of order, that they've all had their chance to rally, right? And what I mean by that is, of course, Bitcoin's going to be rallying the entire time, but you're going to need to check off Ethereum once it starts, you know, outperforming Bitcoin. You're going to need to check off large caps once you start, you know, seeing a bunch of those move, mid caps as those move, and after you start hearing about all the small caps, even if they happen out of order, as long as you're check marking them off as they go, this could be a cycle where it starts with the smaller caps and ends with the large caps. I'm not of that belief. I really have this audible really as just an insurance plan that I'm at least a little bit exposed to all of the different, you know, ranges of coins. That way, no matter what, I stand to make gains. And then beyond that, just sit tight, relax, and above all, make sure you have an exit plan written out somewhere, whether it's on a whiteboard or in the notes in your phone, and make sure that you follow that to a T. Well, what would be a good exit strategy and what tools might you use to help you execute that exit strategy? Well, that's going to be my next video. I hope you got some value out of today's video with my 3 different parts to my strategy of how I plan to make the most out of my dollars in this bull run. As always, if you guys are enjoying the content, do me a huge favor on your way out if you haven't already, and like and subscribe to the channel, as it helps me tremendously, more than you could ever know. And also, I'll put a couple videos up on the screen if you want to watch more of my content. And on my way out, as always, remember to invest in yourself.